So for those of you who've been following my channel, you've been well aware that I've been telling you to buy put options once the gaps fill on the SPY if you see a red bearish or a trend reversal overall 30-minute confirmation. With that being said, the SPY ended up recently reversing once it filled the second highest gap that was waiting to fill above, which is not the best level, but it's towards all-time highs. So if you see a red bearish 30-minute confirmation, once this gap fills, I made it very, very clearly over a week in advance. Once that gap fills at 561.50 to 562 zone, you're going to want to buy put options. And as you can see, once the SPY ended up filling that gap, it ended up gapping up, closing that gap, forming a red bearish trend reversal 30-minute confirmation. Then it continued to form another red bearish 30-minute confirmation. No reason to have a gap and go because it's reversing out the gap from 561.50. No reason to reverse at this gap that was waiting to fill below at 560.63 because there's no bullish 30-minute confirmation. It's forming lower highs below the previous closing price of this 30-minute candle, selling off very, very hard, right? So if you were to compare that overall pattern that had recently occurred at that lower gap to the new gap, which was the best level I told you to buy put options on, man. You can see we have a lot of major resistance at 563.70. We have a lot of major resistance at 564.60, and we're nearly at all-time highs. The highest gap that was waiting to fill above was towards the mid 564 zone. And if you compared August 22nd's trend, August 22nd's 30-minute patterns, you should have been in on put options past 10 a.m., man. Look at the confirmation. It's the same exact confirmation, man. These unique trading strategies that I'm teaching you work, and you can use them at these overall levels, man. I prepared you for this overall trading situation over weeks in advance. So in terms of the overall pattern, man, this was an identical pattern in setup to the recent 10-day 30-minute chart. You can see right here, there's a red bearish, the SPY gaps up. The SPY gaps up, right? Is it going to be a gap and go? Well, once the SPY gapped up, the first 30-minute candle was a bearish trend reversal 30-minute candlestick. Once the SPY gapped up, the first 30-minute candlestick was a trend reversal bearish pin, bearish 30-minute candlestick. And both of those 30-minute candlesticks from the day it gapped up ended up closing a gap. On this day, it ended up closing the gap from 561.50. On this day, it ended up closing the all-time high gap, the most overbought gap, the best gap to possibly go short on and buy put options, the best level possible, right? So if you studied the overall history and the trend in the past and you listen to the plan that I've given you, you should have been in on put options on the opening of this 30-minute candlestick at 10 a.m. You should have compared the chart and you should have said SPY is reversing at the higher gaps. SPY is attempting to repeat a similar pattern, a similar history compared to August 22nd. And you should have been in on put options on the opening of this 30-minute candlestick at 10 a.m. You should have been saying it's not going to have a gap and go. It's going to start reversing to fill the gap below like it did on August 22nd. It's going to start reversing to fill the gap below like it did on August 22nd. And then once it fills the gap that's waiting to fill below, is it forming bullish 30-minute confirmations or bearish 30-minute confirmations like last time? Well, if you compare the overall chart, you're going to see the 30-minute chart is literally identical. Look at this, man. Compare the first hour. Compare this overall 30-minute candle, this 30-minute candle, to this 30-minute candle, to this 30-minute candle. The prices are even similar. And it's more overbought. And even the way it's downtrending, it's on a slanted downtrend. It's on a slanted downtrend. It closes the gap, it starts to crack. It closes the gap, it starts to crack. And then you have lower highs. Look at this. It tops out towards the previous close of the 30-minute. On the third candle, it tops out towards the previous close of the 30-minute. It sells off for 2.5 hours straight. You have 5 bearish, slanted, red 30-minute candlesticks. You have 5 bearish, slanted, red 30-minute candlesticks. Those are all the reasons on why you should have been in on put options using the game plan that I've given you, using the unique trading strategies that I teach you. The gap reversal, man. So simple, man. You should have been banking on put options throughout this morning, man. There's absolutely no fucking excuse. If you implement what it is that I'm teaching with the levels that I've given you, you should have been in on put options past 10 a.m. There was another confirmations to buy put options at 10:30 a.m., man. All the lower highs were there. All the red bearish 30-minute confirmations were there. Now, in terms of my personal trading, you guys know I tend to focus, in terms of my own personal trades, to mainly trade during the middle of the day, and during power hour trading session. In terms of my personal own trading, I mainly focus during those times. So in terms of the trades that I ended up making, the first trade that I ended up making today was on call options, man. I absolutely crushed it. I was buying calls during key reversal times on the dips with bullish 30-minute confirmations. I'm going to be getting into that, man. So in terms of the overall trades that I ended up making, I'm going to walk you through this. This was the first one that I ended up making on the day at 12:05 p.m. I ended up buying SPY 562 calls at 35 cents a contract. I ended up adding at 32 cents a contract. And then at the speed of fucking light, I kept adding, man. I kept adding into my winners, adding at 33 cents. I was seeing all these bullish 30-minute confirmations, all these bullish confirmations on the 1-minute chart to continue to add to the fucking calls. I made it very, very clear at 12:20 p.m. This is literally getting ready to pump, and a green, red, green on the 1-minute pattern is forming. The previous resistance is reacting as support, 560.30. This is about to pump, man. We ended up selling into the move at 46 cents, man. That overall trade was a 60% profit return on the fucking day, man. So in terms of that trade, why call options? Well, I was comparing the chart to August 22nd, and I was saying this pattern is identical. We just had 5 slanted red candles to the downside, 5 slanted red candles to the downside. And in terms of one of my levels, it was very understood that this 559.70 to 559.30 zone is a key make or break level. If this reacts to support, massive spike. If it cracks and reacts as a resistance, massive drop to start to fill the gap below at 556. So the SPY was overall sold. It was overall oversold. And I was looking at this overall 30-minute chart, and I was saying we just had 5 slanted bearish red to the downside, 5 slanted red bearish to the downside. We're at a key support level. It's oversold. It's due for a bounce. You got some wicks that are waiting to test at 561, 561. So if you looked at the overall 30-minute pattern, after that 5th red bearish candlestick, and you can see the wicks, there's a wick right here, right? And there's a wick to test above. There's a wick right here. There's wicks to test above. Wicks to test above, right? So if you looked at the overall pattern, the next 30-minute candlestick was going to be a reversal. It's going to be a big green bullish 30-minute candlestick towards the opening. So if that history repeats itself, which it has been throughout the whole entire day, it's just due for a bounce. And like I said, it's also at a key overall support level on the 30-minute overall zone. If it holds, it's going to have a massive spike. So to me, in terms of buy and call options, it was a no-brainer to buy the dip 5 minutes into the opening of that overall 30-minute pattern, man. And I kept adding into the bullish confirmations, man. So that's why I bought those call options at 12:05 p.m., literally towards the exact lows. That was my first personal trade on the day. And then in terms of 12:20 p.m., I made it very, very clear. Green, red, green on the 1 minute. Previous resistance 560.30 reacting as higher support, right? This is all my real-time analysis. We absolutely crushed it on these calls. We ran that up 60% profit return at the speed of light. So in terms of that, what I was seeing right there, you can see right here, you had resistance at 560.30. You see the resistance at 560.30, right? Well, if it breaks down and reacts to support, the SPY is going to quickly spike to 560.65 to 560.80. Those are the next overall levels it's going to spike to, right? So when I noticed that it had a break above this resistance and then the pattern was bullish, green, red, green, you have a higher floor, you have higher support above that previous resistance. That was even more confirmation to add into hold with confidence, man. So in terms of my own personal trades, that was my own personal trade on the particular day, on today. And then in terms of the next trades that I ended up making, man, I just kept on crushing it on overall calls, man. So in terms of the next trade, SPY 562 calls at 57 cents. Ended up having a small L. I quickly got out at 46 cents, literally just a scratch. And then in terms of the next trade, I bought 561 SPY calls at 30 cents a contract. And then I was adding into my winners. I kept receiving adding confirmations, man. On that first trade, I added 3 times. We absolutely fucking crushed it. On this small loss, I didn't add. And then on this third trade, I kept on fucking adding, man. I ended up adding at 30 cents a contract, gotten at 30 cents a contract, ended up selling at 54 cents a contract. That was nearly a 100% profit return at the speed of fucking light, man. Crushing it. And then the trade after that, 561 calls at 34 cents, added at 32, added at 30, sold at 44 cents for a 50% profit return, man. First trade, 60% plus. Literally the second trade, small L, 11 cent loss on the contracts. Third trade, fucking 100% return nearly. Fourth trade, 50% return nearly. In terms of power hour, I did a fairly good job, man. The timing could have been slightly better, man. These SPX calls, I bought these 5615 calls at 270 as soon as I got in. They went to 410. They dropped to 10 cents. I was adding towards the lows, man. I was adding towards the lows, and then they closed nearly at my initial entry. They ended up closing in the 200-cent range. They dropped to 10 cents and went up 2,000% in 1 minute. I was telling everyone, man, it's going to close strong, man. And then this one, I got in towards the exact bottom. I was adding to my SPX calls as I bought these SPY calls. I bought these 560 SPY calls at 43 cents a contract. I ended up adding at 29 cents a contract. And then I sold into the rip right as the market was closing into the 70-cent range. They went to 85 cents a fucking contract, man. That move into the close was fucking insane. Those SPX calls went from 10 to 200 in a fucking minute. These SPY calls went from 20 cents to 85 cents in minutes, man. The play was fucking crazy, man. So with that being said, man, in terms of the overall trades and other reasons to be bullish, man, just to like quickly review the overall chart here. It had a lot to do with the overall 30-minute chart, man. In terms of the overall 30-minute chart, it was bound to have that green, red, green close. I wanted to buy into the pullback, into the close. That was my overall game plan, man. It was attempting to form higher support above 560, and then you have a floor that's forming above this previous resistance. It's attempting to reverse. Green, red, green overall pattern was expected to likely occur, have a reversal. Very similar kind of move if you compared, a lot of similarities in terms of today. In terms of the end of the day, if you looked at August 23rd, you have this green, red, green move as well, right? Looking for the retest. So in terms of one of the things that I was seeing, you have this resistance on the 30-minute. You have this resistance on the 30-minute. Then you have this nice green candle. Then you have this nice green candle. Very similar, right? Then you have the red candle in the middle. Then you have the red candle in the middle. Once the SPY goes below that red candle, green, red, green ends up closing very, very strong. Green, red, green ends up closing very, very strong. That was the main reason for wanting to buy calls. In terms of the similarities, man, I was seeing a lot of similarities from August 22nd for the beginning in the middle of the day comparison. And then towards the end of the day, I was seeing a lot of similarities for August 23rd. So I flipped days in a sense, right? Now, in terms of the overall levels, man, the new levels that I have for you, right? So those are my overall trades for the day. I absolutely crushed it on buying call options. I mean, I would say I did fairly well for an overall bearish trend day, man. But in terms of my updated price action analysis, what you need to understand is the SPY has been reversing at the gaps. It's been reversing at the gaps. Now, based off of what I'm seeing on the daily chart, you see you got a red, green, red here. You got a red, green, red here. This is one thing I want to say. We could potentially have a bullish day heading into tomorrow if the SPY ends up gapping up. So in terms of the SPY, if we do end up gapping up, it's likely going to be a bullish day. So we ended up closing at 560.80, and this is what I want you to be aware of. So in terms of tomorrow, to maintain bullish momentum, to maintain overall bullish, we need to hold above 559. 559 is your absolute make or break level. If we are gapping up, it's likely going to be a gap and go and a strong bullish day. So if we're gapping up, I would pay attention to 561. Look towards 561, break above 561 sends us to 562, break above 562 sends us towards those all-time highs, right? So that's what you need to be aware of in terms of bullish thesis. Now, in terms of bearish thesis, we need to go under 559. To maintain bearish, we need to go under 559. We go under 559, you see the red bearish 30-minute confirmations, we're going to fill the gap. There's a gap that's waiting to fill below at 556.25. The SPY has been having a lot of reversals at the gap. In terms of for calls, it's been reversing at the more oversold gaps, not at the more overbought gaps. Recently, it's been having these small little gap ups, and then it fills the gap that's waiting to fill above 561.50, reverses, comes crashing back down, does not reverse the gap. Red bearish 30-minute confirmations continues to sell off. Same thing happened today, right? So look for the oversold gaps. That's why I made it very clear with the put options. You need to focus on the overbought gaps, especially within this overall bullish market, right? Made it very clear that the best level for puts was the highest gap that was waiting to fill above at the all-time highs. Clear confirmation that that trend reversal pattern was going to repeat itself in comparison to August 22nd. So in terms of tomorrow, if we're gapping down or if we crack below 559, red bearish 30-minute confirmations, we're going to drop to fill the gap at 556.23. Make or break support. If you are ever seeing bullish 30-minute confirmations, bullish trend reversal 30-minute confirmations at 556.20, you're going to want to buy call options there, right? So that's the main game plan for tomorrow. So the levels you should be focused on In terms of puts, if we're cracking, reacting bearish under 559, you could try to puts. And then in terms of calls, if we're reacting bearish, 556.20, look for bullish trend reversal 30-minute confirmations. And then in terms of calls, if we are maintaining above 559, bullish. But if we are gapping up, it's likely going to be a gap and go. It's likely going to be a strong bullish closing day. So if we are gapping up, 561, keep an eye on 561, keep an eye on 562. If we break above 562, we're pushing for those all-time highs towards 565. Those are the main levels, man. I need you focused on 562. I need you focused on the true best levels, 561, 559, and 556, right? And then just to give you some more levels in advance, right? Just some more levels in advance because, throughout time, sometimes we have some crazy volatile days where there's a big 10-point move, 13-point plus move. This channel likes to focus more on the micro overall price action, preparing you for the next day. But just to give you some levels in advance as well. If we go under 556, the next level below that is going to be 550 zone. Below that is 549. 549 is your make or break support. That's a gap breakdown level. If SPY gaps up, you take the low of day from where it gaps up. That's a gap breakdown. Below 549, there's no support, meaning it's going to come crashing down. Previous resistance to react to support, 544.70, and then there's a gap that's waiting to fill below at 543.80. That zone is your best zone for call options. And then in terms of swing trading put options, if you are seeing bearish 30-minute bearish candlesticks, trend reversal candlesticks on the daily chart towards 565, you can attempt to swing trade puts. If you are seeing bullish daily candlesticks at 556, not the best level, you can attempt to swing puts, but the overall best levels to swing trade, that was for calls. The overall best levels to swing trade calls would be 544 to 543.60, and then the lower gap at 533 to 535. That's more macro price action analysis. Make sure you are setting your price alerts at those overall levels. So in terms of my own personal trading, I absolutely crushed it today, and I think I did extremely fairly well for an overall bearish day, considering all I was doing was buying call options at the overall right times, man. But with that being said, in terms of the other trades that were made today inside of Team Roar, G-Roar had his first red day within over a month and 2 weeks of trading, man. So in terms of the overall trades that G-Roar ended up overall making in the morning here, it was on calls, man. It was on call options. So I mean, I could understand potentially buying call options at the market open. I can completely understand doing that, man. But I just don't understand. I'm not 100% sure in terms of what he was seeing in terms of buying call options past 10:26 a.m. Towards those red bearish 30-minute confirmation closings. Because to me, that was clear red bearish 30-minute confirmations. I mean, you guys are well aware that I tend to sway away from trading in the morning. Every once in a while, I will do it, but I really like to just focus on trading during the middle of the day. And then in terms of day trading, I believe the best time possible to trade is during the power hour trading session. That's what I'm focused on, and that's what I've truly mastered, right? But it was a red day. It did end up being a red day in terms of the other overall trades. We had some members go green. We had some members red. It's bound to happen, man. After a month and 2 weeks, the green streak is finally over, man. But we're coming back for vengeance. You're gonna absolutely see. We're gonna crush it, man. He said he's gonna have 11 fucking wins on the day tomorrow, and you know me, I'm gonna fucking fire off tomorrow as well, man. On a bearish day, me buying these calls towards the perfect fucking times, we're going absolutely fucking off tomorrow. With this game plan, we're going to absolutely fucking crush it, man. So it is what it is. Every once in a while, you do get a red day. It is disappointing, though, in terms of the overall setup and the other game plans and the strategies that it was today. But it does happen, man. I mean, even on some days, man, sometimes people make the perfect plans, and then some days they just don't follow them, man. It happens in situations as well. But it is disappointing. It is unfortunate, but it does happen. But in terms of fucking Friday, man, Friday was fucking insane, man. For those of you who were here on fucking Friday, look at the trades that were made on Friday, man. I'm gonna show you this in terms of Friday. Friday was fucking crazy. So like I said, in terms of today, it was like 3 L's in the morning on calls. And then I came in middle of the day in power hour and absolutely fucking crushed it on calls. But in terms of fucking Friday, man, it was fucking insane, man. Look at this. I'm going to walk you through this, man. So in terms of the overall trades that were made on Friday, I'm going to quickly go over this here. You're going to see, man, it was nonstop fucking winning, man. Let's buy 222.50 Tesla calls for 44 cents a contract. In at 44 cents a contract. And then in terms of exiting, ended up getting out for a 100% profit return at 95 cents, man. That play was fucking crazy. A 100% return at the speed of fucking light, man. And you think the winning would stop there, but no, it just keeps on fucking happening. 558 SPY puts for 48 cents a contract. As soon as we got in these fucking puts, they went up 19 cents. And they just kept on fucking going up. They went up from 48 cents all the way to 144 cents, man. Exiting at 144 cents there for 200% plus profit return at the speed of fucking light, man. And then 560 SPY puts at 38 cents a contract ended up exiting in the mid 50 cent range. And then another one, man, SPY calls. In terms of the SPY calls, that one did not work out. That was dub, but they were extremely cheap, very low risk, only 14 cents. And then look at the next trades. SPY 562 calls for 39 cents ended up exiting at 60 cents a contract. And then 5615 SPX puts at 80 cents, ended up going to 190 cents. And then in terms of the last trade on the day, 3:53 p.m., literally within minutes, SPX 5635 calls for 100 cents, ended up selling at 360 cents, man. Non-stop motherfucking winning over here. Like I said, man, we will have some red trades, but a red day, very fucking rare over here. Red days over here, very fucking rare. In terms of his overall win streak, a month in 2 weeks, man. You understand? This is trading. There's 12 months in a fucking month. If you can't afford a red day, you have no risk management. You don't know how to fucking trade. Hell, if you can't afford a red month or 2 red months, you don't know how to trade or don't have proper risk management or don't have an account suitable for even fucking trading, man. There's 12 months in a fucking year, man. We're going to have some red days every once in a while. It's going to happen, man. Look, well, this is the toughest overall business to be operating a company in terms of giving real-time options trading alerts. But like I said, we've created something more strategic, a real-time options trading alert system. This is not easy. This is the toughest business model in terms of to sustainment. But like I said, our churn rate is currently below. It's now under 10%, man. Only 9% are choosing to cancel. We are maintaining 91% of our customers right now. We are absolutely crushing it every single day, man. So you're going to see. Tomorrow, it's going to be fucking vengeance, man. He ended up having a red day today. I ended up having a green day today. We're going to absolutely fucking kill it tomorrow, man. You're going to see that winning streak is going to be beginning starting tomorrow, man. We're going to absolutely fucking crush it. So I gave you guys levels. I taught you guys some of the unique trading strategies. As a team, I would say we did fairly well in terms of the middle day and close, man. And like I said, we had plenty of people go green today, man. A lot of people just called it for the day, man. And you got to be self-sufficient as well, man. Sometimes, we're gonna have differences, agree to disagree, and you do have to be self-sufficient, man. Don't just try to blindly follow everything it is that we're doing. Like, also apply what it is that I'm teaching you. Like I said, in terms of me personally, man, I'm just not seeing a reason to be buying call options in terms of the recent patterns. Like SPY recently filled a gap. There was a gap to fill right here at 561.50 to 562. And what makes that gap a significant reason to short, to buy puts, is because it's overbought. It's towards major resistance. It's towards all-time highs. So if you're seeing a red bearish or a trend reversal 30-minute confirmation at that overall level, is likely best to either buy puts or just avoid calls or just do nothing, right? But in terms of the overall patterns, man, it literally reversed at the lower gap, and you would figure all-time highs, the higher gap, it's even more overbought. There's even more resistance there. So the first time it tests this gap is likely going to drop. But if you just looked at the comparison and waited until 10 a.m., you should have been overall bearish in a sense because you have a trend reversal 30-minute, trend reversal 30-minute. It recently closed a lower gap. Now it's at a higher gap with a trend reversal 30-minute candle. So it's likely going to drop. It's likely going to drop. And then next 30-minute candles is bearish. Next 30-minute candlesticks is bearish. Nothing but bearish red 30-minute candlesticks. But like I said, man, it happens sometimes. It is what it fucking is, man. When you're winning so fucking much, you're bound to have a red day. It is what it fucking is, man. So for those of you who are serious about joining our secure private organization, it's going to be the first link down below within the description. We are absolutely crushing it, and we are going to continue to crush it. It's the first link down below within the description. You will get access to a real-time options trading alert system. We are trading non-stop. We have a 90% plus win rate, buying far out of the money option contracts, typically 3 to 5 legs out at times, selling in the money 90% of the times. We are known for adding to our wins. We like to add to our wins to increase the fucking winning. We like to protect our profits by selling into the moves at key levels and setting profit stops. Profit stops are going to ensure that we go green to green on the overall trade. A rejection, we get stopped out for profits, right? And then it's going to protect our average cost. If we're adding to winners, how do we protect our new average cost as we're adding to the winners, as we're increasing our gains, right? Because when we tend to win, we tend to win big. So when we're up like 10, 15, 20%, we tend to add to winners. If we're down a little bit and there's a winning confirmation, it's not too far from our entry like I was doing today. I don't mind averaging my cost down, but if we're down a lot, we tend to sway away from adding to losers. But like I said, we add to wins, we quickly do it to increase the winnings. And then once we do that, we tend to have a big move in our favor. And when that occurs, we quickly set the profit stop after adding to the wins, and we get stopped out for profits. And like I said, you move the profit stop up to continue to protect your risk from an overall big move. And also, we sell into the moves, man. You're going to see a lot of my main thing has been selling into the moves, man. Selling into the moves, I'm going to be leaving profits, leaving gains on the overall table. But for me personally, I have key levels of interest where I like to exit. I have key times where I like to exit, right? But sometimes if you're just selling into the moves, man, you got to be able to sell if a rejection is against you, man. I mean, you can do both. You can do both. You could set a profit stop and you could sell into the overall moves, right? It's just the beauty of the profit stop is it's going to ensure you that you maintain green on a green trade. You don't flip red, right? And it's going to protect you from rejections as you move your profit stop up, as you're continuing to win. One rejection, it stops you out for profit. Me personally, I really like to sell into the moves. That's always been my overall style. It's just you have to be disciplined enough on a rejection to quickly get out of that overall trade. But it's very important to have that safety net instilled with a profit stop as well. So with that being said, man, we're going to absolutely crush it. If you want to be a part of our secured private organization, it is the first link down below within the description. You'll get access to our real-time options trading alert system where we alert everything it is that we're doing in real time. The morning trades, the middle of the day, and power hour trading session. We're buying cheap, far, low risk, out of money option contracts. We put in our max risk per trade, just as any other trader, they have their max risk per trade, right? Except what we do differently is we do not use stop losses, right? A stop loss is not going to prevent you from losing. It's going to keep you losing. That's why loss is literally in the term stop loss, right? It's not going to stop you from fucking losing, folks. What's going to stop you from fucking losing is buying further out of the money option contracts, putting in your max risk per trade, letting the trade just fucking expire worthless, man. We have the whole day for the contracts to go in the money. Those SPX calls that I bought in the 200s, they went to 10 cents and then they spiked straight back up to 200s, man. This happens all the time, man. I'm telling you, the dead plays, when we enter a dead play, that means our timing's a little bit off on the play, right? But we're holding for a long period of time. It drops 50, 60, 70%. 70% of the time, that dead play is down 50% plus. It comes back to life and goes in the money. There's no reason for a stop loss. The contracts are so cheap. Our max risk per trade is what we're putting into the contracts. There's no need to get stopped out. We can just hold the trade, man. Very rare situations I will sell. I had one trade where I sold for a small loss. Very rare situations I will do that if it just makes 100% sense to just get out and then just to wait for a new entry. Or you can just hold that trade. You could buy a new strike. There's a lot of different things you could do, man. But like I said, the main focus has literally just been just letting them expire fucking worthless and just holding the fucking wins, man, and setting the fucking profit stops and adding into the fucking wins. So if you want to try a new style of trading that we figured out, that works, that we've mastered, like I said, we got a 90% plus win rate, buying far out of the money option contracts, selling in the money 90% of the times. This is one of the hardest trading styles to master. 98% of traders who buy far out of the money option contracts lose money. When we do it, we sell them in the money. 90% of the times winning. That makes our group fucking special, man. So if you want to be a part of something real, if you want to be a part of something special, if you want to be a part of something unique, man, it's the first link down below within the description. We'll be trading alongside with you guys tomorrow within the chat.